we talked about this. And I explained to you that there was the possibility you might have to take some kind of loss.
I think I want my money back.
Will the FDIC save me? That's an important question to ask given what's going on right now throughout the world. Hi, I'm Greg Eident with Elliott International, the largest independent financial and social forecasting firm in the world, and the foremost authority on Elliott wave analysis. Now, we've already explained why banks fail. If you haven't seen that video, I suggest you watch that one next. But the question we're tackling for you today is, if your bank fails, will the FDIC save you? At EWI, our founder and president, Robert Prechter, gave his perspective on this question in his New York Times bestseller book, Conquer the Crash. What we're going to do for you today is go through an excerpt of chapter 16 of that book called How to Find a Safe Bank, where Bob explains his thoughts on this question. But before I dive in, be sure to like, subscribe, comment, share, and if you find yourself wanting to learn more about this and how to not only survive, but thrive in a deflationary depression, check out the links in this video's description. Okay, so will the FDIC save me? Robert explains. The U.S. government's Federal Deposit Insurance Corporation guarantees to refund depositors' losses up to $250,000, which seems to make safety a moot point. Actually, this guarantee makes things worse, for two reasons. First, it removes a major motivation for banks to be conservative with your money. Depositors feel safe, so who cares what's going on behind closed doors, right? Second, did you know that most of the FDIC's money comes from other banks? This funding scheme makes prudent banks pay to save the imprudent ones, imparting weaker banks' frailty to the stronger ones. When the FDIC rescues weak banks by charging healthier ones higher premiums, overall bank deposits are depleted, causing the net loan-to-deposit ratio to rise. This result, in turn, means that in times of bank stress, it will take a progressively smaller percentage of depositors demanding cash to cause unmanageable bank runs. If banks were to collapse in large enough quantity, the FDIC will be unable to rescue them all. And the more it charges surviving banks in premiums, the more banks it will endanger. Thus, this form of insurance compromises the entire system. Ultimately, the federal government guarantees the FDIC's deposit insurance, which sounds like a sure thing. But when tax receipts fall, the government will be hard-pressed to save a large number of banks with its own diminishing supply of capital. The FDIC calls its sticker a symbol of confidence, and that's exactly what it is, just a symbol. And that's Robert's perspective. Now, you might be asking yourself, are there any safe banks out there? How can I protect myself against this? Well, you can find those answers in Robert Prechter's New York Times bestseller book, Conquer the Crash. It also answers questions like, what risk does my mortgage hold? Where can I find the safest money funds? Is my pension safe? Is my insurance with a weak company? Can I make money in a crash? And more. You can find a link to that book in this video's description, as well as other links to resources we think you might be interested in. Well, thank you for watching. If you enjoyed this, be sure to like, comment, subscribe, share, and all that. I'm Greg Eident with Elliott Wave International. Until next time, I hope you have fun riding those waves.